Ladies and gentlemen, good day and welcome to the Bank of Maharashtra Q2 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us from the management, Shri A.S. Rajiv, Managing Director and CEO, Shri A.B. Vijay Kumar, Executive Director, Shri Ashish Pandey, Executive Director, and all General Managers of the bank. I now hand the conference over to Shri A.S. Rajiv. Thank you, and over to you, sir.
Thank you, ma'am, and good afternoon to you all. I am Rajiv, and today our board of directors approved the Q2 results. I think you might have seen that we have already published in the SEBI sites as well as our site also regarding the presentation of the bank results. We feel that the results are very good in the present economic scenario, and as you are aware that our growth rates are much above the industry growth rates, especially in case of advances. When the industry is grown around 15 to 17%, our growth rate is almost double, around 28 to 29%, and the deposit is in tune with industry growth rates. But the growth rate was 30, 31, maximum 28 to 29%, but it was not reflected in pricing. And the NII also grown in the same level, so the operating profit and the profitability of the bank also was good. Of course, the interest rate is slightly increased, so we have our strategy. We have changed for more of like a little bit of borrowing, and with excess SLR we have used for borrowing, and we have funded for the credit, and it was improved the CD ratio from 66 to 77%. So during this period, we have added around 8 lakh new customers in SB and around 50,000 current account holders, and 37 branches we have opened, now reaching to 2,066. And our coverage is enlarged to almost around 510 districts all over India. Earlier, as against earlier 2 to 3 years back, the coverage was below 300 districts in India. And the growth rates of MSME growth rate was 25%, agriculture 12%, retail 27%, RAM sector 22%, and corporate is around 38%. And the agriculture is slightly 12%, mainly because we have sold off some of the IBPCs around 2,200 crore on agri for increasing the NII. So, financial results for the quarter, at a glance, the business was grown at 16%, deposit is grown at 8%, and CASA is increased by 13%. CD ratio improved to 76%, advances growth is 29%, NBA declined to 3.4%, and net NBA reduced to 0.68%. PCR improved to 96%. Operating profit is grown by 4.43% on year-on-year basis, which is likely so while seeing the numbers, but in reality, corresponding last Q2 in 22, it was 260 crore exceptional item of DHFL recovery. It was accounted under other income. Barring that exceptional item, the operating profit, if you see that, it is around 20-22% growth rate. And Q-on-Q basis, Q1 of this year and Q2 of this year, operating profit is increased by 22%. And this operating profit growth is mainly on account of NII growth through the pricing, not under other income growth. Other income is almost in the same level. Growth rate is single digit, mainly because As I already told that 260 crore corresponding last year, it was booked under other income. And second point was profit on sale of investments. Last year, the profit interest rate was favorable. This year, interest rate was moved northward and we could not able to get for profit on sale of investment, though it was 32 crore profit is booked. But our portfolio is fully protected and modified duration of the HFT as well as AFS is around 1.29%. So there is nothing to worry with the portfolio of the investments. And it was impacted the yield on investments also, it is around 6.3%. So net interest income is increased by 26% on a year-on-year and 12% on quarter-to-quarter basis. Net interest margin reached 3.55%. Cost to income ratio improved to 38.82%. In spite of other income is not improved much because of the reduction in the profitability, profit on sale of investments. So return of assets improved to 0.92 and CRAR is improved to 16.71, where Tier 1 is 13%. Return on equity also is improved to 18.32%. So net profit for the current quarter is 535 crores as against 264 crore Q2 last year. Operating profit is 1,462 crores as against Q2 it is 1,400 crores. Return of assets 0.92 as against 0.53 for last Q2 and 0.81 for Q1 financial year 23. So profitability is concerned, you might have seen that growing steadily for the past 12 quarters. Not only profitability, business growth. Business growth, this is the one bank is having around 30% growth rate continuously we are showing for the past 8 quarters. And in the meantime, we can see that the asset quality is also under control. SMA2 as well as the NBA addition, slippages, all are under control. So while coming to assets and liabilities, net advances is grown by around 31%. RAM sector is grown by 22%. Retail advances 27%. MSME 25%. And bank holds, like last quarter, we holds around the COVID-19 provision of 1,200 crore as of September also, and we have not reversed any amount. And cushion available for the bank is around 1,200 crores. So these are the major highlights of the results of the current quarter. So we will, if it is okay, we will go for question answer session and whatever other areas and our regarding digital area where our Executive Director Sri Pandeyji will give you some brief of digital what we have now itself.
Sure.
And what the forward what we have done that. I'll hand over mic to Mr. Pandey.
I think in fact last after the loan as to apply.
Yes, sir.
Separately they wanted to have it. That's what is told in the initial. We'll have Q&A now. They are the financials.
Huh? Okay, in brief I will tell if they can have a question and an answer. Thank you. Welcome to all of you for this analyst meet, and thanks for the all good support and along with the bank. So coming to your digital initiatives, certainly a very good question and very good insight as well. So if the business, the bank is sustaining the growth and the business parameters as you can see for last 7 to 8 quarters and even today on the various key performance indicators. So certainly this is also one thing that whether the press or the analyst people will like to know the sustainability through the digital, because digital is the order of the day. So when coming to that, I would like to say one more thing, that not only for your own sustainability, but even the ecosystem, whether the central government or the state government or the local bodies, the ecosystem which is changing is also demanding the development on the technology and digital side. Now in brief, your bank is actually concentrating on the 3 pillars in the technology front. The one is the digital journeys. I will brief also about that, and the digital operations, and third is the digital compliance. In this, what we are trying to cover is those initiatives which are yielding to customer convenience, staff convenience, that is ease of doing business, and the third is the cutting my cost. So we are also reviewing the processes where the process can be made, more technologically driven, and where the time can be saved, customer convenience can be maintained, and also what we are looking, particularly probably you may all find one word, digital compliance, that the compliance function which is from the regulator side, one of the major stakeholder of the banking industry, that it should happen within the journey itself. So these are the three pillars which your bank is focusing on. Now if you see our website for last 5 to 6 months, the RFPs were so many in between. So one is that related to, you would have seen recently robotic process automation where 50, the board approved RFP was floated and it is on the culmination stage. The next is also UPI, which is we wanted to scale up at a very large scale. So that is also now on the conclusion scale. Some 5 to 6 on cyber security, because that is also very, very important today to take care of when you think of digital and technology. So 5 to 6, already the purchase order proper after the RFP and CVC guidelines, the process was done and already the purchase order has issued. Similarly, I can assure you that some, like WhatsApp banking, if you see, there is a presentation also which has been uploaded to our website and also in the stock exchanges. So if you see the growth particularly for last 2 quarters, so if you see the last 2 quarters, whether it is a WhatsApp banking or from the chatbot or from the mobile banking or the ATM transactions and all, so it is moving. So yesterday also we have opened 2 digital banking units, one in Satara and the one in Aurangabad, but then not only related to 75 which is announced by Honorable FM in the budget, but then we are trying to have our own scale up in the days to come from say 10 to 15 and then 25 to 50 in a year or so. So this is what I wanted to say, that on TIN 2.0, it was also a press news, we are the 3rd bank to integrate with the TIN recently. So like this, I can say the team is not only working upon the new initiatives which is going to give the good fillip to the business, but also the good convenience to the customers. Like shortly, the bank is also poised for the video KYC where the bank opening accounts and all will happen. So in totality, like some of the RFPs were as per the Reserve Bank, like bureau integration and all, it was a close between the 4 bureaus only, where it is not only a selection but then into an integration with the bureau company, data aggregators and some scrutinized, impaneled fintech companies. So in brief, this is the whole, let me tell, the framework, thought process and the architecture of technological initiatives by the bank. Yeah, I think ease also you would like to know. We inched up from position 9 to 6th and we were benchmarking again there. We improved a lot. Now ease 5.0, as far as the internally is 5.0, there are 3 pillars. One is the common for all the 12 banks. The second pillar is where the bank is specific roadmap. So their bank has selected from 20 to 22 some projects which is being placed to the board and will be submitted to DFS. Already draft and all, like other banks are also doing in the same way. It has been also submitted to IBA. And the third is collaboration. So let me also brief, your bank is also working on all these front. So not only the initiatives, but let me tell you, like digital journeys, digital operations and digital compliance. So like 3 are the major stakeholders, government, customers, my own staff and certainly the Reserve Bank of India regulator. So these 3 pillars which we are working is going to help us in sustaining and going forward. We look in a 1, 2 year, 3 year tenure that whether it is our own business, maybe the retail or other or account opening CASA and liability, asset and liability side, or whether third party. It is also a RFP in our website which we can see There also, even in third party, which we are trying, that we should start with a sourcing of end-to-end from 5% onwards and increase it to 20-25% in 2 to 3 years' time. So this is the roadmap of the bank.
Okay, thank you, Mr. Pandeyji. And now, if we can start the question answers, if any questions, then in the meantime, we will discuss any of the queries regarding digital or any of the areas wherever it is as and when it is required. Over to Madam. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashok Ajmera from Ajcon Global Services Limited. Please go ahead.
Thank you, ma'am. Thank you, sir, for giving this opportunity. And my heartiest compliments to you once again, sir, to all of you, Mr. Rajiv, Vijay Kumar ji and Ashish Pandey ji, along with your team of all general managers and performing people for the best performance. In fact, it is your bank is a bank of only 3.5 lakh crore business, but on many of the parameters, I mean, you have excelled even better than the other top banks also. Your PCR coverage ratio is now 96%. Your NIM is 3.55%. Your gross NPA is under control, less than 3.5%, and net is less than 0.75, that is 0.68%. So my compliments to you on all the fronts, sir. I just have a couple of questions or other observations and seeking some information also. Sir, now, of course, you had a small base, so your growth is in percentage terms is very high as compared to many other banks, as far as especially the credit goes and overall business also goes. So now going forward, number one is that where do you see the growth coming forward? Number two is with this kind of turmoil in the global markets, the interest rates are hardening up, and a lot of uncertainties which have come up, even local interest rates have gone up. Whether do you see the pressure coming up now into the coming quarters, though the September quarter has been saved, even on the treasury front also you don't have losses, rather you have made some money only. So going forward, where do we see and how are we cushioned to take care of those major blips or major happenings? So this is number two. And number third, sir, there was a report that on agriculture loan portfolio, there is a tremendous pressure. And on an average, about, I think, 18-19% of the agriculture portfolio is going into the NPA. Yours is around 14.5%. So what are your views on the agriculture loan front? And little bit on the education loan, because the interest rate going up, the currency dollar becoming, rupee becoming weak. Now the repayment pressures are there. So these are the couple of few questions in this round, and if time permits, I will ask again, and if the moderator allows me for some more questions, sir.
Yes, thank you for your compliments, and definitely that we will continue our good performance. And regarding growth, the growth is happening around 28-29%. Out of that, you might have seen that the growth is averaging among all the sectors, especially in case of RAM sector. Housing loan is growing by around 22%, MSME or retail sector or RAM sector is the major thrust we are given 27-28% growth rate. And the current quarter, corporate sector also grown around 33%, basically because earlier some limits and other things sanctioned by the corporates they have utilized because of the interest rate pressure. So the corporate sector may not grow much in future because that they have already utilized the limits, and we are not much going aggressively in corporate sector. So as our board direction, we are targeting mainly on RAM sector. That was the reason we are concentrated. Now, yesterday also we have reduced our interest rates in case of housing loans and other retail sector to improve the quality of the credit and to increase the RAM sector. The second point is regarding the turmoil or the interest rate increase in the market interest rates. Of course, it is true that market interest rates is increased, but our position is, as of now, it is comparatively good, and you can compare with other banks that some of the banks, their CASA is come down by 2 to 3% during this time. We could able to sustain the CASA ratio at the level of June itself. For March, slightly has come down because you are aware that March end, because of the budgetary allocations and other things, 1%, 1.25%, 1.5%, because budget allocations, credits will come. This is a temporary nature. So average 55, above 55% CASA we could able to continue this quarter also, and we may be expecting that it will continue. And term deposit we have not grown much. The reason, specific reason, because of the cost of deposits. And term deposit we are not, and we have not taken any bulk deposits with a differential, or we will able to manage with the present level. Of course, we have gone for little borrowing. That borrowing is gone for with excess SLR, and it's a strategic move as directed by the board. Our all board members are highly qualified people, and they have good experience in treasury and other areas like LIC also. And they, as per their direction, we have switched over from through borrowing mode, we have gone through excess SLR, and we have diverted, and through this diversion, our CD ratio is gone up from 66 to 76%, and this will fetch additional 2 to 2.5% additional NIM for as against the average yield of the investments. And in the meantime, we have reduced our modified duration of securities to 1.29, and over a period of time we will reduce to 1.10, so that there will not be any additional depreciation from the investment point of view. As of now, we have around 5 to 6% or 67% of the excess SLR is there, that we can able to move further towards the increase in CD ratio. That we are going to do in the second half of this year. The third point is agriculture. As you are aware that it is correct that agriculture is slightly difficult, and our portfolio earlier 2 years back it was more than 20%, because of the divergence where we have earlier our more importance was given for CC or KCC. Now this year the presentation also we have given agriculture investment is grown by 50 to 55%, and the CC is not at all grown. So we, the strategy, basic strategy we have taken that KCC to agriculture investment and allied activities, that more kind of, it's an industrial area, MSME sector, food processing, or rural godowns, or where it is a good return also, as well as there is risk is not much risk, like monsoon issues are may not be there like KCCs. So the fourth point is education. Our education loan is grown basically mainly for outstation students. That's not for these smaller loans is very less, and most of the loans are about 20 lakhs, 25 lakhs like that. These all are fully covered by mortgagors, and it is very capable people. They have taken the education loan, and that is why you can see that NBA under education loan is very small amount. That. Yes. So this portfolio is built up, and this portfolio is built up through the department, and verticals are there, education loan or housing loan. That it is the job of the vertical has to see that the NBA or slippage management of the particular vertical. So in going in future also, this is the area where we are more concentrating on slippage management as well as SMA 1 and 2 management. And from the figure it shows, it is proved that our slippage management as well as SMA management is comparatively good. I think that If any other points?
No, thanks a lot, sir. I have just two small other questions. One is that loan acquired through assignment of 2,294 crore, where we say the tangible security coverage is 28.79%. So what kind of loan this has been acquired, where 11% the originator is holding and 89% we are holding? So, and with a tangible security coverage of only 28.79%. So what is this, this what kind of loan these are? And secondly, on income tax front, I have got a query of 348 crore provided against 201 crore in the last quarter. And this is also net of the DTA and write back. If somebody can explain me that about 348 crore, how did we arrive at this picture? So these two more questions, if you can answer, sir.
So this first question, what you have raised, and we have not acquired any loans according to this. Actually, we have only sold off some IBPCs at the.
No, sir, note number 13. Loan acquired through assignment 2,294 crore, where the tangible security is only 28.79%. I don't know, I may be wrong, but I read this note.
We would request you to please come back in the queue.
No, my question is already on.
Okay. So this is, I think, pool purchase?
Yes.
Yes. So that you can explain that.
Yes. Good evening, Mr. Ajmera. These are actually the pool buyout which we have done during the quarter and half year. Actually, these are some of the pools are originated under the gold loan category also. These are the mainly secured category only. But few of the loans pool which we have acquired under the education loan and others which are unsecured in nature, those are appearing under that particular category. Earlier also we have acquired those type of assets, and the repayment in those accounts are quite satisfactory, and we are not facing any problem in these type of accounts.
Regarding income tax liability, I would like to share with you that we have not provided for any current income tax liability, as per the computation of income tax, there is no tax liability because we are having the carry forward losses. What are that 348 crore? This is on account of DTA reversal. So we were having that DTA on the losses, that is roughly 280 crore. That we have reversed, and you know that when we reverse the DTA, it will improve your CRAR also. And rest is that because of reversal of provision, we have reversed the corresponding DTA. So there is no current income tax liability provision in respect of the overall income tax liability what we have shown.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, we request you to limit your questions to 2 per participant. I now request Mr. Mahesh MB from Kotak Securities to please proceed with your question.
Good evening, sir. If you could just kind of give us some color on what is the kind of corporate recoveries that you are expecting. Thanks. On the corporate NPL book, sorry.
Corporate recoveries, we are expecting more from now NARCL transfer, because a lot of accounts are lined up because of this final bids in 2 cases are finalized, and the entire process will be completed by the end of this month. And as regards to other NCLT accounts, there are DSKDL and then Island FS, all these accounts are also there. As such, our corporate NPA portfolio as it is come, it is very less remain now in NPA category, but whatever is there in either NCLT and ready for transfer of NARCL. So amount of around 500 crores we expect in this current remaining Q2.
In terms of NARCL, you are saying that the full, what is the status here? In the sense, how much of the accounts are expected to be transferred now?
Actually, the 20 accounts are shortlisted amounting to 3,000 crore. But the final bids, confirmed bids are received in case of 2 accounts at present. So immediately by the end of this month, 2 accounts will be transferred. That will be The actual recovery will be around 160 crore. Balance, of course, these are all written off accounts, so it will go to P&L directly.
And the other one you said, the combined total you said was 500 crore impact at the P&L front, is it?
Yes.
Okay, perfect, sir. Done. Thanks.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity and congratulations for the good set of numbers. Sir, I just wanted to understand more on the credit cost. Now, your PCR is 96%, even your gross NPA is declining. But your, I think, credit cost is still at 1.6%, right? So how do we see that stabilizing going forward? Yeah.
So this credit cost actually 587 crore credit provision we have made. This is two components is there. One is new slippages as well as the existing NPAs. So our net NPA ratio was earlier it was 0.88%. It was for bringing down to 0.68. Additional provision of around 250 to 300 crore provision we have made. So once this net NPA is coming down, our estimate aim is it has to come below 0.5. That is what we are expecting that. So once it is come to this level, then further provision requirement for bringing down the net NPA, the additional requirement will not be there. And in the meantime, parallelly we are trying for further reduction of the slippages also, and SMA 2 also, SMA 1 and 2 also, we are under close monitoring. So then this provision coverage provision will come down. Once the real provision for addition is this quarter it was 597 crores, and we are providing 100% provision we are making for this. That is the reason. In reality, as per RBI norms, it may not be required. Only maybe 100 crore, 150 crore is sufficient. So we are giving 100% provision and bringing down this. That is why credit cost is high. Real credit cost is not even, I think, 0.4 to 0.5 may come in the present scenario. And in future also, is 0.35 to 0.4 credit cost will continue.
No, so understood that. So this 250 to 300 crores of additional provisioning, so you're targeting to reduce net NPA to below 0.5%. So this additional provision will continue only for a couple of next quarters, right? Then your net NPA will fall below 0.5%.
Correct. Yes.
Hello?
Yes.
Okay. So from fourth quarter onward, is it safe to assume a credit cost of 0.5%? I mean, if you subtract this 300 crores, so the remaining is what, 250, 300 crores, right?
Correct. Another 1 more 2 quarter, it most likely it will continue. Then the credit cost will come below. Definitely, it will come below 1%. Definitely.
Below 1%, right? That would be a stabilized level of your credit cost.
Yes.
Okay, that's it from my side. All the very best, sir. Thank you so much.
Bye.
Thank you. We'll move to the next question from the line of Prabal Gandhi from Ambit Capital. Please go ahead.
Yeah, thank you. Congrats on the results. Sir, my question is on the borrowing stand. Can you highlight what is the SLR currently that we are holding in the balance sheet?
SLR holding in SLR. We are holding excess SLR of roughly 18,000 crore, and out of that we have taken the borrowing. And if you see the borrowing cost is roughly 5%. And if you want to take the term deposit at present, that would cost more than 6%. So we have taken a conscious decision, and we have switched to the borrowing. And you know that these borrowing is against the SLR securities, and taking on average 5%, giving 8%, it is giving the NIM more than 3%. So that was the conscious decision taken by the bank to increase the borrowing.
And these borrowings are overnight, so it has to be rolled over, or what is the tenor of these borrowings?
These are the overnight borrowings, and every day we are rolling over it.
Okay, and so out of these 18,000 crore is the excess SLR, and you would also be dipping into some part of the mandatory XLR under MSF. Are we doing that?
No. Mandatory SLR. We are taking borrowing against the excess SLR.
Got it. Understood. So second question is on the corporate front. So MD sir did mention that the growth was driven by the utilization of limits, and going ahead it could slow down. So does that mean we are not sanctioning much of the proposals on the corporate side?
What?
Can you repeat?
So are we actively sanctioning corporate proposals, or are we restraining ourselves from them?
No, it was not said in that reference. This quarter, our corporate credit growth is in the range of around 35 to 36%. So that is quite a high growth rate. Corporate, we are targeting to grow by 20-22%. It will be year on year basis. We will continue to grow. It is not that we are not targeting the corporate also, but we want to have a proper mix of RAM and corporate, which is our target to maintain at around 40 to 43% of the corporate and remaining in the RAM sector. So that way we are growing, and we will continue to grow on the corporate side also.
And sir, which are the segments within the corporate that you are most confident on currently?
Certainly, pharma. I think this is one of the segment, and we are also looking, to the sectors where there is a good exports, which is well supported with the countries. So as of now, if you see, like on the corporate side, we are looking at is on the good quality infra also. Then your second pharma, and some of the industries, even in textile, which are doing and having good exports. So I think these 5-6 sectors we are looking to, and will continue to support this sector while continuing. You have heard our MD Sahab also that on the retail loan book we have reduced our rate of interest. So combining both, we would like to continue in the range of say 22 to 25%, 24% range of the growth in the segment.
Understood. And sir, just on the capex bit, so the proposals that we are seeing, are they more into the greenfield side, or they are still on the brownfield side, which is where the capex is being driven?
Yeah, it is continuing both on that, because there are certain, if you see today's the EV also is coming very well as a economic green projects, no. So we are having both on the retail side also, and if you see the capex on the corporate side, so not only the brownfield or the greenfield, but what we are looking at is the prospect of that particular segment or the industry, and where actually they are selling, and you may see actually our this presentation. So if you see AA and A, if you see there is a good increase, that itself gives a good clue that the bank is very much selective on choosing the client and going forward. So what we are looking at, yes, industry analysis and all, it is there with the bank, but that even within that we are having some more parameters to look into, and then expand into those lines, whether it can be greenfield or maybe a brownfield.
Okay, thank you sir, and all the best.
Thank you. The next question is from the line of Maruk Achania from Nuvama. Please go ahead.
Yeah, hello sir. So my question is on the CD ratio. So it's 76%. How much higher can it go from here? What is your comfort level? Because at the end of the day, CD ratio depends on management comfort level. But what I have seen historically is that state banks are comfortable with 76, 77% CD ratios, whereas private banks, probably because they have higher tier ones, are comfortable with 85, 86, maybe even 87%. So where do you stand on your opinion on the CD ratio? That's my first question, and then I'll have more questions.
I think we can go up to 80% CD ratio now.
Okay, so till 80%, you will not have a big pressure on growing your deposits or offering very high rates, right? Because you still have leeway to liquidate your existing investments or borrow against them.
Yes.
So you are comfortable on deposits. You are, when do you think will the deposit tightness start hitting you?
No, another 2 to 3%, definitely we can go for increasing the CD ratio. And we have not raised any CDs or any bulk deposits or any differential rates. So our strategy is to first build up the assets, then we will go for raising resources if it is required. As far as our excess SLR is already there, excess SLR is 17 to 18,000 crore is there. So that is sufficient for us to reach that 80% CD ratio.
See, actually it is a trade-off between the returns on the either of the side. Okay. Now you are coming, directly like, whether what time we will be resorting on the high rates or nothing. It is actually not like that. Let me put, the bank itself is now expanding. So almost some 60 to 70 branches bank has opened. And now going forward, we do have a plan of around 150 to 200 branches to open, like, the new format of digital banking units, which yesterday you would have seen, Honorable PM.
Yes.
So what we are feeling that we are entering into the new territories, and there also we are targeting, both on the retail side. Retail means both on asset and liability side. Now coming to the CASA, that is also adding me. So it is not, like, only one sector or one location or one cluster which we are specific to, and then we may face issue. So we are also trying to compensate, because of the increase in rate, what portion is moving from CASA to fixed deposit side or maybe the other bank side. But then we are trying to build up our own base on the CASA sides. So like continuing the range of say 54, 55, 56% going forward as well, entering into the new territories. And then having the trade-off that which option is better, whether it is from the investment side or from the loan book side, and where the profitability is protected.
Sure. And so given that your LDR can expand from here, your margins could continue to improve in the next few quarters.
The margin now itself, I think we have reached to 3.55%. I think it is comparatively one of the best, and margins.
Yes.
We may be difficult to increase too much, because 3.5 it will be around 3.5%. It may be here and there, maybe 10 to 15 basis point. It may change.
Got it, sir. Got it.
Yes.
Okay. And sir, what about the quality of MSME loans? Any particular feedback you have on ECLGS or on any segment of MSME?
Yes, MSME, we are containing our slippages in MSME. Quality is improving, and this ECGL also is performing well. It's not that, barring some few exceptions.
Got it. But what would your total cumulative slippage from ECL? GS?
It is not, we have not seen of it.
So the total slippage itself is 594.
No, but
MSME.
madam is specific where we have given. So actually her point is that what is your feel wherever you have given ECLGS. If I am not wrong, that is the page she wanted to. Actually, that is, we are looking into the book, both from the credit monitoring and from our credit risk side. Both the departments are looking into it. So we have not seen as such, any pressure coming in on the mid-size or maybe the MSME where the ECLGS is given and some signs of stress. Yes, sometimes it moves to SMA 0, but then maybe the very good regular follow-up. So there is a roll forward sometime and roll back, but that more or less the position is same, but then not moving to slippages more or less. I think that is not an issue.
Okay, sir. Thank you so much. Thank you.
Thank you. The next question is from the line of Suraj Das from BNK Securities. Please go ahead.
Hi, sir. Thanks for giving me the opportunity. Couple of questions. First question is, sir, on the restructuring slide. So this 4,845 crore restructuring number, is this inclusive of everything? I mean the previous CDR, SDR and earlier MSME restructuring number as well? Because your this restructuring 1.0 and 2.0, the sum is not equal to 4,845.
Yeah, it includes all restructured book, entire restructured book.
Okay. And sir, there, if I see the agriculture and corporate restructuring has increased on a QOQ basis. So sir, I mean, if you can explain the rationale behind it, why this number have increased?
Yeah, margin. Absolutely. Agriculture actually, its restructuring is done only purely based on the natural calamity, and that too at a district level. Some of the centers wherever the restructuring has been done, but that is very marginal increase in there in agriculture sector. In corporate, few accounts where the DCCO has been extended, and if the DCCOs are extended for a non-infra for a period of 2 years and 1 year, more than 1 year, and for infra more than 2 years, then it amounts to a restructured accounts, though it is a performing asset, and it is only purely because of the extension of the DCCO.
Okay. Okay, understood. And the second question would be, sir, if you can provide the loan mix by benchmark, how much would be your EBLR linked, how much MCLR, and how much float fixed rate, and what would be the total quantum of ECLGS number?
Okay, that we will provide that.
Now, what I'd like to clarify one answer to the 3 questions regarding the agriculture NPA, and then the digital, prior to the digital journey and compliances level, and the latest question on restructuring agriculture. All put together, there is one good thing is happening across the country. Apart from the digital level is happening at the individual bank level, Government of India has initiated Jan Samarth portal, wherein 13 of the major Government of India schemes have been uploaded, that end-to-end, from the application to the process, sanction, disbursement and close, everything going to be the digital. And KCC is now, they are giving a topmost priority where most of the problems are living, there, because of the, you can say, credit culture or waiver upload that happened in the past due to many political reasons or vagaries of monsoon, whatever you say. But going forward, the digitalization going to play a very big answer for all, bringing the most credit culture, ease of doing business, and above all, the TAT will also come down, and there is some percentage of multiplication of loan is happening at the crop loan level by these many banks and also cooperative societies. All these things will go, and there will be a healthy agricultural growth will be there in the country. This is what I would like to make a clarification.
Suraj Das, have you completed your questions?
Yes.
Thank you. We'll move to the next question from the line of Rohan Mandora from Equirus. Please go ahead.
Yes, sir. Good evening. Thanks for the opportunity. Sir, on the RAM portfolio, just wanted to understand the good growth that we are seeing. So what is the origination channel here? Is it a DSA driven or branch channel? And also, how are we pricing these loans vis-a-vis the market leaders in terms of the market share that are there? So that was the first question. And the second is that you alluded to the fact that on the agri side, we are targeting agri businesses here. So the new proposals that we are getting in these agri businesses, are these fresh proposals or are they takeover from other banks? And if so, like what kind of banks or other lenders are you targeting in this segment?
First, the first is in pricing. He was saying about RAM
origination channel and pricing. Yeah, origination channel and pricing.
Yeah, channel, we use all the channels for mobilization of the RAM sector. Whether it is a DSA we have in place, branch, definitely we have the branch, aggregator model also we follow. So there are various models which we follow for channelizing the business. But as far as the rate of interest is concerned for the RAM sector, if you see that recently we have reduced our housing loan rate to the lowest in the industry, that we are at present at 8%. And for personal loan also we have reduced to 8.90. This is also the lowest in the industry. Both these are the rates revision has been done. in spite of the increasing rate rising scenario, we have reduced the rate only to attract the good quality of assets, good quality of customers which we can onboard. That is our target for raising the RAM sector advances. Sir, agriculture sector, somebody wants.
Yeah. In case of agriculture sector, we are focusing for the investment credit and particularly food processing, then pack house, grading or cold storages, and there is no any takeover from the other banks. We are find out the fresh candidates and fresh customers we are taking on board in our bank.
Okay, so these could be fresh entities also which are getting set up that we will be funding in this case. That would be correct understanding here?
Yeah.
For example, okay, sure. And just on the first reply in terms of the origination channel, so just want to check on the DSA side, like is it a predominant origination channel, and if so, are the payouts higher? And second, again in terms of the pricing that we talked about, so just want to understand the customer segment which is being targeted. Is it predominantly a salaried segment, or is it across the board in terms of the customer segment in the RAM?
Yeah, I will tell
So
that.
we're talking about this, yeah.
Yeah. DSA, we have the DSA commission is at par with the industry level. We cannot have a lower DSA commission payout and higher DSA commission payout. So our DSA commission is at par with the industry level. As far as the rate of interest is concerned for the RAM segment, we have recently launched that scheme for the defense. We have given the best possible rate, that is the 8%, and as well as the salaried customer with some PSU or good organizations where they are working, there also we have given the rate of interest. In addition to that, general rate of 8% has been given for a CIBIL score of 800 plus, that CIC score of 800 plus, so they are the very good assets which we can build. That is the target customer for us.
That's right. And then lastly, on the corporate sanctions, are these consortium-linked sanctions, or are these all standalone sanctions that the bank is giving in the A and AA rated segment?
So this is
maximum it is consortium only. I can say that almost 65-70%, and the rest of the things maybe somewhere one or two bankers, and where maybe we are sole.
Sure, sir. Thanks a lot.
Thank you. The next question is from the line of Rakesh Kumar from Systematic Shares. Please go ahead.
Yeah, hi. Thanks a lot. So, firstly, this question on this excess SLR thing. So, basically, like, we are lending the excess SLR as such, using through the, RBI borrowing window. But you said, sir, I think that your borrowing cost is around 5%. So just wanted to understand under which window we are taking this borrowing from RBI at 5%?
We are taking through traps, and if you see when I am talking about average borrowing cost is 5%, I am taking the half year ended. So initially that you see the borrowing cost was 4% plus, and now recently it has increased to 6%. So if you see overall the borrowing cost was 5%, and whereas the term deposit now it is crossing 6.50 or more. So we have taken this arbitrary opportunity where we did not go for the bulk deposit, and we resorted to the borrowing.
Yes, sir, understood that. So your incremental spread by lending excess SLR would not be 3%, correct? As you said on the call just now.
Combined borrowing, all borrowing costs.
All borrowing. No? It is not only, the borrowing.
Then borrowing means not only excess SLR, there are some SIDBI borrowing, there are other NSP borrowing. That type of borrowings also is there.
Recently, we have taken borrowing from SIDBI, which is 4.17%. So we are taking more.
Refinance thing.
Refinance. Yeah.
That I understood, but you just mentioned in your response to some other question that you are taking from RBI at this rate and you are maintaining a spread of 3%. So I was a little surprised.
Actually, he was actually, talking about the 6 months spread, number one. Number two, on a bouquet of the borrowings, not only the RBI specific to Reserve Bank.
That is now understood. Secondly,
this sort of you can consider it. Weighted average sort of you can consider it.
Correct. Now it is understood, sir. Secondly, on this, the tenor of your borrowing, obviously, it is it's an overnight thing. But on the lending side, what is the where you are using this borrowing through the excess SLRs, and what is the tenor there?
That is a different tenor is there. 1 month MCLR also is there. Some cases it is overnight also is there. And I think that the borrowing is not only overnight, it is a term repo also is there, correct?
Yes.
So term repo is up to 45 days is there.
Yes.
So it's a combination of borrowings, not really fully. I think overnight borrowing may not be more than 2,000 crore, 2,500 crore. And no other borrowing windows we have not utilized. That also kept outside actually.
No, so basically all this, this NDTL position, then your excess SLR position, and then borrowing position and then lending position. All the asset liability, maturities should be matched. So first of all, if you can, tell us what is the average maturity period that you have for your NDTL, and because if your NDTL keeps on rising, which will happen in the natural course of, process, then your excess SLR will actually come down. Then your borrowings would come down. Then you have to wind up those loans which you have given against these borrowings which you have taken from the RBI. So if you can give some clarity that what is the average maturity you are maintaining throughout, so that because the flow is coming from NDTL. So if you can help us understand that, it will be helpful.
Our CFO will give you the details, the ALM statements of this borrowing as well as where it is utilized. He will provide you that.
Sure. Thanks a lot, sir. Thanks a lot. Thank you.
Thank you. The next question is from the line of Pushkar from Joindre. Please go ahead.
So my question is, I actually got disconnected in the middle. How much part of the book is fixed and floating? You gave a number.
Fixed and floating rate of interest in credit book.
No, we don't have any fixed rate of interest. Our entire portfolio is floating. They are linked to either repo linked or the MCLR based lending, which we are doing. We don't have any fixed rate, sir.
Okay,
Sorry to interrupt, Pushkar, your voice is breaking up in between.
Hello.
Sir, your voice is breaking up in between.
Now?
No, sir, it is still not clear. I would request you to please email your queries. We'll have to move to the next question, which is from the line of Jay Mundra from BNK Securities. Please go ahead.
Yeah, hi, sir. Good evening, and thanks for the opportunity. Sir, if you can explain the formula for your interest rate. So, and this 30 basis point cut that you have effected 1-2 days prior only, what have you changed in the formula? In just the, I mean, if you can first tell us the 590 repo, and then what is the business spread or credit risk for mortgage, and how that has changed in the last few days.
See, the interest rate has a simple formula. One is the marginal cost of lending, that is we are having mainly for the corporate and other borrowers, agriculture borrowers. But for retail borrower, it is a repo link. So it is 5.90 is the repo, and it is linked to that rate. As far as the cost of the lending rate pricing is done, it is mainly depending upon the business spread and the credit risk. Credit risk in case of the mortgage loan is less than 0.5%. And if you see my cost of deposit or cost of fund is in the range of 3.31 to 3.50. So comfortably I have a margin over that around 4.5%. If I remove my cost of the fund, other establishment cost and all, I am very comfortable for giving the 8% rate of interest to my borrower. Because at the same time, if you see the marginal cost of lending, 1 year MCLR is 7.80. So still I have a spread of 20% over my MCLR pricing. So I don't find any problem in giving this rate of interest, and that too the segment specifically having the CIBIL score of more than 800 scores. So which are one of the best, where the delinquency I will say even is less than 0.01%. So credit cost will be in the range of 0.01%. So this is two components are there. One is the profitability is one aspect, and second the market competition is also there. If I have to compete in the market, then I have to offer the one of the best rate. And since our cost of deposit is very low, so bank is capable enough to offer that type of pricing.
Right. No, so of course, sir, you have thought through, but what I was trying to understand that in the last few days, your cost of deposit would not have gone down, right? The incremental cost of deposit would not have gone down, so you would have reduced the credit risk premium or business risk premium, and one of these two have to go down so as to so as to bring down the overall cost lower. So what have you changed? Have you changed the credit risk premium, or have you changed the,
It is purely Diwali Dhamaka. It is a business strategy. So we have changed our business strategic spread, which we call the BSS, that we have changed, and our rate has come down.
Right. And so how frequently can you change this, sir? So let's say Diwali gets over the last...
Yeah. This rate is valid till 31st January 2023. So entire Diwali, then Christmas, all these will be covered.
And how frequently can you change, sir, I mean, in a calendar year or in a fiscal year?
Yeah, BSS is case-to-case basis. On portfolio level, we can take a decision. It's a business strategic spread. So it can be that call can be taken by banks at any point of time.
Yeah, Judge, just to supplement you, because you wanted to know, it is not only related to one product. The bank strategically is also viewing a customer relationship from 1:4. Okay. Now certainly the bank is drawing up various segments for the salary accounts and various others, the PPF and all. It is not in that presentation, but then around 2 lakh we have targeted, and more than 60% we have covered it. So what we are looking at this product not in isolation per se, that matching only everything from neck to neck, but then it is a relationship. And like, the CIBIL score of 800 and above, what Mr. Rudra has told. So like it is a total bouquet of services on which the rate is also offered, and the team field below is approached with the customers and then look into the total wallet of the share.
Right. So I was just trying to understand the...
Sorry to interrupt, sir. So we will have to restrict your question here. For further questions, you may please email your queries. Due to time constraint, that was the last question for today. I would now like to hand the conference over to Shri A.S. Raji for closing comments.
You can go ahead.
Yeah. Yes. I am Vijay Kumar, Executive Director. On behalf of the MAHABANK Parivar Bank of Maharashtra, we convey our sincere thanks to all the analysts who have participated in this Concall today. You have been a source of support to us for the quarter after quarter. You must have observed that Bank of Maharashtra has been doing extremely well in terms of the growth for the last 3 years, and particularly for the last 8 quarters. And with all your support and guidance and your analytical skill, which helps to the market to push our prices also on the market. And on behalf of the Bank of Maharashtra, we convey our sincere thanks to you. Besides, we are concentrating in the growth. We also want to be number one in terms of the digital compliance integrity. This is what our focus. We want to be more ethical banking. And once again, I convey my sincere thanks on behalf of the Bank of Maharashtra. Wish you happy Diwali.
Thank you very much. On behalf of Bank of Maharashtra, that concludes this conference. Thank you for joining us, and you may now disconnect your line.